Hey everyone, today is August 6th, 2021. I believe I am live here. I'm just going to give it a second to catch up. Um, Today we have a bunch of things that we're going to go over, but I just want to say quickly, thanks so much for tuning in to the last few weeks of the show. I've kind of gotten a bit of feedback as to what content you want to see, so I'm trying to adapt the show every kind of week to cover the most important stuff every week for what you guys really want to hear. Today we're going to talk about a bunch of things. We're going to talk about the state of the market, where it is right now, where we kind of ripped tail on the S&P 500 and the NASDAQ for about 6 months. And we're going to talk about how we can potentially hedge risk because historically every September has been a pretty good corrective month for the stock market. Just looking back in the last 40 years or so, September is usually a down month. And so I thought I would share with you some of my strategies for hedging against that. We're going to talk about Robinhood because that was the stock debut we talked about last week and how, people weren't thinking that it was going to be a big deal. And it turned out that the IPO day, maybe a bit of a flop, but then it just ripped tail this week as well. And we're going to kind of dive into why that happened. We're going to talk a little bit about the infrastructure bill and Bitcoin and what that means for taxation of cryptocurrencies. And this is a call to action, especially to the viewers who are in the United States. Call your senator, make a difference. We'll kind of explain what is happening and how it can affect the way that you hold or trade cryptocurrencies in the US. And then we're going to dive a little bit deeper into something I haven't seen a lot of people cover, which is this Bitcoin ETF. That was a comment that was dropped by the SEC chairman, Gary Gensler, about how they are looking at doing a Bitcoin ETF using Bitcoin futures. So not the spot Bitcoin, not like a GBTC conversion or anything like that, but a Bitcoin ETF based off of the Chicago Mercantile Exchange futures, and how that could potentially be coming this year, and some dates that are laid out based on when they filed for their application. So this is stuff that I haven't seen a lot of people cover in the the vernacular, the particular detail. So we're going to cover that today, and hopefully we can prepare market-wise for a potential Bitcoin ETF. So let's dive into it really quick here. Also, really quick, if you haven't already, we have a Discord channel. I've posted it in the description of this video down below. If you want to talk about stocks, cryptocurrencies, or just hang out with me, feedback on the show, or topics you want to see, join the Discord below, and we can talk about almost anything there. So today I want to dive in a little bit to the charts, and I usually don't go over technical analysis on this show, but I wanted to share a little bit of my opinion on where we are and what could potentially be happening in Q3 with a whole bunch of macro events and just the way that I feel about the stock market in general. So basically, let's zoom out here to the monthly time frame. As you can see, the stock market has been rip-roaring ever since the bottom of the COVID dump here. So we watched QQQ shed, a good 20-30% here, and then ever since, the money printer was turned on with the Fed and the rates were lowered to zero, we've just gone astronomically high. And the QQQ actually does reflect a little bit of a, sideways action. It's not as, beautiful and green as the S&P 500. But the point to kind of emphasize here is that we have been going straight up in, a pretty easy direction for the last 6 months. Every single dip on the daily for the S&P 500 has been bought up very, very quickly. And the question is, when are we going to get an actual correction? Because if you look at the charts here on the monthly, we have things back here. This was the 2008 housing collapse. Obviously, that was a few months of bearishness. But even on the way up in a regular trend, we'll get 1 or 2 red months, right? And we'll kind of retest, let's just say, the moving average of the month, which will be the 12 EMA. And so as you can see on this chart, we're grinding up these moving averages. The market, the economy is expanding and growing. And then ever since COVID, it's just been this different level of, vertical ascension. And the question is, can we just keep doing this every month till the end of the year? Or are we going to see a pullback? It's really hard to predict these things. But from the research that I've done, there's a very high likelihood of the market consolidating in September. And so I want to position myself to probably, sell a little bit of my long-term QQQ or SPY holdings and look to potentially either hedge, maybe not sell and just hedge, or sell and then try and buy a little bit cheaper because the correction, I think, is inevitable. I think we will have a red month sometime before the end of the year. And this is basically how I would approach it. So one of the things that you need to actually get significant consolidation is usually a trend change of sorts. So that would be a daily bounce where you would have, a dump like this, and then you kind of bounce, but you don't quite make it back up to the highs, and then you kind of go lower. And that would basically confirm a daily downtrend, and then you would zoom out to a longer time frame like the weekly to kind of see how the trend was holding up. And so When it comes to the S&P 500, this kind of weekly line here, the EMA 12, which I really like to use, has kind of been this rock solid support for months. We have broken under it, but very, very briefly, only to be bought up and kind of ascend above it. What concerns me a little bit about this chart too is that when I zoom out to the monthly, I also see that we are quite monthly overbought. And in the last 4 years, when we've been monthly overbought, it doesn't just end up, sideways consolidating to cool off the monthly RSI. It usually results in a sharp drop, maybe some sort of event or news story. In 2018, it was the Fed, trying to raise rates and spooking the market a bit. And then obviously the correction here was COVID based. I don't know what reasoning the market will have to correct yet. Maybe it's the Delta variant, maybe it's not. But I would look for some sort of event to trigger this, and then you would see in the shorter term time frames what that would look like. A sharp daily drop that just didn't really have a great recovery to it, unlike all the other daily drops which were bought right up. So there's two ways to hedge this. Obviously, you can try and sell your S&P 500, but that can be a little bit tricky, and for tax purposes, you might not be able to just buy and sell, buy and sell. The way that I really like approaching it is using this instrument called the VIX. And basically what I do is when I feel that we're getting close to a weekly or a daily or a monthly correction, I buy VIX calls a few months in advance. And so I'm not going to go into the options chain and kind of show you what that's all about. But if you know about options, you're buying a coupon that allows you to buy something at a certain price. And so the VIX indicator, basically, you can't buy it directly as it's not reflective of a price of anything. It's just an indicator of sentiment that goes between, I think, 0 and 100. And I think during the COVID collapse, it got up to 85. But essentially, if I thought the S&P 500 was going to go down, and I was like, okay, it's probably just going to be a run-of-the-mill, weekly or monthly correction before we kind of resume up again, what I would do is I would purchase elongated VIX calls. And what that basically gives me is a leveraged instrument to buy any volatility. When the market collapses fast and quickly, that's when you see these really big moves in the VIX. And so you can already see a couple days ago, I think, or weeks ago, I did a video on QQQ correcting and all that, and the VIX went from 16 to 25. And so I had VIX 20 calls, for instance, that were dated about 2 months out. And when it went up to 25, those calls doubled. So you can buy, if you have a portfolio, let's just say, of $100,000 of S&P 500, you can put $1,000 into VIX calls. And then if the market spikes and on even a little daily dump, you're able to double that 1,000 into 2,000. You've just hedged 1% of your portfolio, and it only cost you $1,000. So I like using that instrument, and I want to dive a little bit more into like the likelihood of when things are going to correct. But I found kind of this farmer's almanac of previous years of stock history, and basically, when you look at the months of return for the S&P 500, you can see that January, February, some of the weaker months of the year. And the stronger months are kind of in the middle, March, April, May, and then we see a bit of a slowdown into summer, and then almost always for the last 20 years a correction in September, and then a bit of a bounce back October, November, and December to kind of have everything grind upwards. So if you're trading on a monthly basis, it does look like September is kind of one of the weaker months, and then usually after September you get kind of this bounce back rally. I know that in a few previous months, October was a pretty brutal time. Going even further back, 1980 to 1920, it's somewhat similar, where basically the weaker-ish months will be in the beginning of the year, and then you'll have a correction in September. So September is this month where the stock market just usually finds some reason to correct. There's kind of that mid-pause before things kind of continue on and on. In my analysis, I'm not including the possibility of a recession or some black swan event. This is just the normal course of things and how they go in a year, and September is just one of those times where things like to correct. Obviously, when the stock market, though, is correcting, negative 0.8 or negative 0.5%, individual stocks might do a lot more. And I know a lot of people watching this show are heavy into one tech stock or another, and that's more about who this video is for. So if you're heavy in an Amazon or an Apple, if the S&P 500 corrects, to 5 or 0.5%, an Apple or Amazon might do even more. And even going to like one of my lists here that I have, like you can already see that Amazon already dropped almost 10% from its earnings highs, pre-earnings highs, and then Apple has kind of been in this range for about a week, month. It's been trying to correct, but this is another one that even going back to last year, August through most of September was a pretty corrective month for Apple. We can go back here to 2018 as well. It was another one that was a pretty corrective year. I don't think it really dumped that much in Now it was pretty fine in 2019, but just a couple small examples. But again, if you want to look into it, VIX calls are the way to do it. If you are not familiar with options, another way of doing this is by purchasing UVXY. The problem with UVXY is holding it long term doesn't really work, so you kind of have to be on the money within the next 2 weeks of the correction. The reason I like the VIX calls is that there is a bit of a decay on them. They will lose value if the VIX is not above 20, but it doesn't seem to be as bad as UVXY, which is another leveraged instrument kind of way of hedging the market fear. So yeah, just wanted to dive that, throw that in there a little bit for people, just in case you were in a lot of stocks. It might be a good time to hedge, just buy some insurance. I think this year or last year, the big story was that Bill Ackman kind of looked at COVID in February or January and was saying, oh, this could be a really big thing. And so he ended up putting like a very, very small percentage of his portfolio into, I believe, VIX calls or maybe puts or something to kind of hedge the market. And that ended up being like a 100x return that basically hedged all of his long-term investments, which got hurt. And by hedging, he didn't have to worry or think about panic selling. And he was actually able to use the proceeds from his insurance fund, let's just call it, and buy the dip. So really good thing to kind of think about doing in your portfolio every now and then and looking into those hedging strategies. I'll talk more about it in the future, but VIX calls, way to go. Next, we're going to talk about Robinhood. So this was the one I was probably making fun of a little bit last week, but the idea was that, these guys were IPOing and, Robinhood's full of, they were caught up with the whole GME thing. They halted trading on it. They actually, in order to cover some of the liquidity problems they had with GME and not being able to deliver shares, they actually raised a bunch of money. And so a bunch of new shareholders bought in back in January when the whole GME thing was happening. And they've been waiting for this IPO because they're able to now sell their liquid shares on the open market. And so the first 2 days of Robinhood weren't that impressive. But obviously, if you paid attention to the charts, they ripped up. I think the last 2 days, last 3 days, they went up like 80% on one of those days, which is amazing. And so why did this happen? Is it, just is it a short squeeze again? Is it a lack of supply of shares? What's the deal with it? Well, it's a little bit tricky because the stock has only just started trading, so some of that data is not available. But just to kind of go over this article here, this kind of sums up a couple hints possibly. Robinhood Market stock rocketed higher again on Wednesday, leaping as high as $85, an 82% jump on the day. There was no apparent news to explain the rise, though there was clearly an interest among retail traders. 10,000 buy orders entered on Fidelity by retail investors early Wednesday, about 3 times as many as the next bought stock, General Motors. And they had just reported earnings, so a lot of buyers on Fidelity. That's one piece of information. But obviously since then they've corrected. I think it hit $85. There were a few halts, and now it's back down to like 50 or 60. One of the big things, though, was that ARK Invest, Kathy Wood, had bought a lot of Robinhood shares on the first day of the IPO because her company seems to only be able to buy things after they've already debuted on the public market. So she bought, 4.9 million shares, it looks like. Some insiders sold shares, but she was loading up. It IPO'd at $38. It fell to about $34 in the first 2 days before rocketing up, and she was just buying lots of shares. And this is an interesting story because she was one of the first early buyers of Coinbase Coin as well, and that stock has not had the same type of recovery that Robinhood has. I think what I've learned from this experience watching Robinhood is that everyone came into this stock with a negative perception. People thought, screw Robinhood, they mess with the retail traders, they stopped us from buying stock or selling it or something like that. And, we're going to short them on open. And there was all this negative sentiment. Stock twits, it was like one of the most, negative I've ever seen an IPO on. There was no hype. Nobody wanted to buy this out the gate. And the first 2 days showed that, there wasn't much interest. And then after that, it was just kind of like the sellers are gone, and then all that's left are the people trying to short it because they don't like the stock or they don't think the company's going anywhere. And this is maybe a company that's trading, way over revenue compared to other things like TD Ameritrade or Charles Schwab. But what I feel is the takeaway from this is that there were a lot of people shorting this stock, and when it went above that IPO price of, I think, 38, and then the highest price of the IPO day, which was like 42, that's really when this thing took off, because you have essentially no resistance and just a bunch of momentum. You have shorts that are covering because they don't know where to go when the price is in uncharted territory. You have buyers that are buying into the hype, they're buying the gap ups, things like that. And then you have options where people are making all these options for specific strike prices, and then you have a thing called a gamma squeeze where basically certain options aren't written for certain levels of price in a given week, and so that creates a lot of demand to kind of settle and work with hedging strategies. So the lesson, look contrarian sometimes. I think with Coinbase, everyone was thinking this is going to go to the moon. There was a lot of positive sentiment for it. Bitcoin was going to rip. Bitcoin was at all-time highs at 64K, and then the Coinbase IPO marked the temporary top on Bitcoin. And then with Robinhood, everyone thinks by that point, Kathy Wood's an idiot. She bought coin at the top. She's going to buy Robinhood at the top. Negative sentiment just across the board on this. Everyone's saying, oh, short this to zero. This company's going nowhere. And then you look the other way and the market clearly did, and the thing just ripped. So always good to look at the other side, especially when there's a very heavy sentiment on something in one particular direction. So next we're going to talk about the infrastructure bill and Bitcoin. So this is a bit of a complex story, and it's still developing right now, but there's a bit of a call to action on this. I'm Canadian, so I have no part in any of this, but I'll explain it after this sip of water here real quick. Okay, so let's dive into this little article. So the Washington Post made an article on this, but I have a fairly good understanding of how it's been set up. But essentially, there's this giant infrastructure bill going on in the United States right now that's kind of going through the halls of Congress to be voted on. They're throwing in all sorts of stuff to, fix roads, buildings, and whatnot. And usually in these omnibus, these big bills, they try and throw in a few extra provisions to raise capital to pay for some of it. Obviously, they're going to get the money printed to go burr, but they have to cover a bit of face to make it look like they're paying for things. And so one of the provisions that they wanted to put in was, how do we collect money from all these crypto traders, all these cryptocurrency platforms that are making tons of money, all these traders that are probably not reporting their income? How are we going to go about taxing them and getting a little bit of revenue through that? And so essentially, they put forward in this bill this stipulation to define what a broker is in the cryptocurrency world. And to many people, a broker is like Coinbase, or it's like a Kraken or a Gemini, and that's where it ends. But the problem with the language of this bill is they were saying anyone that basically is responsible for regularly providing any service effectuating transfers of digital assets on behalf of another person was considered a broker. And so what this basically means is that if you were a miner of Bitcoin, because you are validating blocks on the blockchain, you might be classified as a broker. And so if you were classified as a broker, you have all these other rules in this bill that apply to you. And one of them is that you have to report tax returns and 1099s and trades to people. And if you're a miner, that's literally impossible. You're not calculating, fiat exchanges. So the law doesn't make sense. It allows them to crack down on certain parties that can't do anything about it. And if you're a really small thing, let's just say you're a DeFi platform where you're helping people gain interest, this law might apply to you as well. And that would mean that, you have to generate interest, interest reports. And maybe you're a small company. Maybe you're just decentralized. You don't even have parties in the US. And so this law was just too broad-based. There was a lot of outcry about this. And basically, a couple senators came forward to propose a solution to all this to kind of clarify what exactly a broker really is. So let's just dive into the article here. I'm going to scroll through it a little bit. So last month, the White House and Senator Rob Portman agreed to a proposal to require increased tax compliance for cryptocurrency brokers as a way to help pay for the bipartisan infrastructure bill. The deal came under intense criticism from cryptocurrency investors who argued it would give the Biden administration sweeping powers to virtually cripple the growing field of cryptocurrencies. It was also rebuked by Wyden, Senator Patrick J. Toomey, and Senator Cynthia Lummis, who are pushing an amendment to the infrastructure bill intended to prevent the Biden administration from applying the new rules to a wide swath of actors in the cryptocurrency ecosystem. So on Thursday night, as the impasse between Wyden and the White House appeared to deepen, Portman and Senator Mark Warner, I'm skipping ahead here. What happened essentially is these three senators, Wyden, Toomey, and Lummis, proposed a solution to this whole, I'm just going to bring up a little tab here, a solution to this whole explainer. And basically what they wrote in their provision was, and I have a thread here, give me 1 second. Where is it here? They proposed an amendment that basically said, anybody who is developing digital assets, is like a software developer or a wallet creator, is exempt from this. Anybody who is a validator, a miner or a staker is exempt from this rule. And so basically they were trying to say, look, we don't want to include all the other aspects of the cryptocurrency ecosystem. We want to just focus on exchanges and people who are letting you convert fiat to crypto and vice versa. Those are the actual brokers. And so they set up this amendment, Wyden, Toomey, and Loomis, and it was ready to go. And then all of a sudden, two other senators, Warner and Portman, popped up, and their thing was a little bit different. And they basically said, look, we're going to clarify this a little bit, but these are the only two parties we're going to make exceptions for. Validating distributed ledger transactions through proof of work mining, so miners, but only proof of work miners. And then also selling hardware or software, the sole function of which is to permit persons to control a private key. So this would be wallet providers that give you full access, like a Bitcoin Core or like a MetaMask and things like that. So these people would be exempt from the law. However, it doesn't cover enough framework. It doesn't cover the people who are involved in DeFi. It doesn't cover proof of stake blockchains as well. If you're a staker and you're validating transactions, you would also potentially be considered a broker. And it would make, reporting user transactions basically impossible, but also mandatory at the same time. And so what this would mean essentially for the cryptocurrency industry is a death knell to anything to do with DeFi and creating, decentralized finance platforms. Custodial wallets as well. So software developers, for instance, if you're running a crypto wallet and you kind of are offering people interest and stuff like that, and you're a really small company, you have to create 1099s for the IRS and report all of your users' incomes. And then how does that work if someone just deposits crypto onto the platform and then withdraws it? How do you calculate what profit they've made? If you're just holding their crypto, maybe not even giving them interest. So it just makes this application of the law very, very difficult to follow. And that's why they wanted to kind of clarify this. And so again, one of these parties, Wyden, Toomey, Loomis, had this proposal to really clarify it, and it would have passed. It would have been good to go. But then Warner and Portman pop up, and essentially they have their own, their own thing here. But the problem is that the White House has now come forward and has basically endorsed the Warner and Portman plan. That's basically only proof of work miners and only, hardware, software, wallet developers are exempt from this. Everyone else has to report to the IRS, no matter who it is and what it is. And so that's a whole bunch of KYC. That's a whole bunch of things that are just impossible for most companies to actually report. And so the rumor here is essentially that the Treasury Secretary and Washington and the Biden administration have been pushing this because back a few months ago, FinCEN, which is another regulatory body in the US, was also trying to propose something that said, look, any crypto transaction over 10,000 US has to be reported to the IRS. If you do this anywhere, if you're a company in the US, you notice someone move more than $10,000, it's got to be reported to the IRS. And they were trying to lower that even to really small purchases. So just imagine having like PayPal and Venmo, and you buy some crypto and you move it to one place and then you pull it out. You would be eligible, or that company would have to report that as a transaction to the IRS, and then you'd be, on the line for reporting it as well. So this stuff to get a little bit of money in taxes just seems a little bit skewed. So anyways, what I have here, and you can look a little bit more into this thread, I'll link it in the link down below after the video. The important thing to take away from this is that Washington doesn't know what they're doing when it comes to regulating cryptocurrencies. You have people like Elizabeth Warren coming out and saying, look, it's just a bunch of shadowy supercoders and blah, 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 and we need regulation here, we need a cop on the beat. They're going to crush this industry because of basic negligence, and that there are a couple people lobbying the crypto industry to get this stuff done. There's a few senators who obviously understand it a little bit better than others, and it's pretty bipartisan. But there seems to be a lot of negligence in the Biden administration for understanding what this asset class is and how to regulate it. And they're putting in these laws that basically can't be followed without just destroying companies. So if you don't want this to happen, I'll link this down below. It's this site called Fight for the Future. If you live in a US state, put in your phone number and your zip code. They'll give you a script to kind of talk to your senator to oppose this amendment. And you basically have 1 day to do this. Otherwise, it's probably going to be included in this bill. If this amendment by Warner and Portman is not killed immediately, then you're going to see all sorts of problems with exchanges reporting and a lot more, just financial products and crypto not go through. So the odds of like DeFi happening in the US or NFT platforms, or all of these things, are just going to get killed on the spot. Ethereum is put gravely in danger by this as well. The Ethereum network, for instance, would not classify as a proof of work in a couple of years or months or whenever they make the next F 2.0. So if you own any of these assets and you don't want them to be crushed, Go make a call to your local senator and get something done about it. All right, the last story here is we're going to talk a little bit about the Bitcoin ETF. So there's a lot of regulatory stuff happening with crypto because people are trying to define what it is. Everyone's trying to collect taxes on it, and people need a sense of like who's here to kind of blame or who's here to really regulate it and take care of it. Like who is, is it a security? Bitcoin, Cardano, Ethereum? What one's a security? What ones aren't? And then if they're not securities, who's taking care of them? Because it's not, there isn't like a defined body for this yet. And they're talking about creating like a cryptocurrency regulatory body that kind of makes rules and laws and proposes them and makes bills and things like that. So the big question that everyone's had is like, where is this Bitcoin ETF? We have had Bitcoin for so long. People are making meme stock ETFs. They're making, ETFs for, I don't know, who's going to be the next president or blockchain this or whatever. You can make an ETF for basically anything as long as it's a public stock right now. But you can't make a Bitcoin ETF. And the reason that the SEC has opposed doing this is because they think that the way that Bitcoin is traded on spot exchanges and stuff is suspect to manipulation and fraud and blah, 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 even though that's been thoroughly debunked. But today we got a bit of clarity from the SEC chairman, or I think last couple of days. We got a bit of clarity as to what a Bitcoin ETF could look like. And this is really important. I think the market hasn't really picked up on this and is not defining certain dates. So I've kind of gone in and do a little bit of research here to kind of define this. But essentially, Chairman Gensler said that they were reviewing potentially some ETF filings around investing in Bitcoin futures on the Chicago Mercantile Exchange under what we call in our craft the 1940 Act. So in 2017, the Chicago Mercantile Exchange, and I believe another one, that one stopped trading, they launched these Bitcoin futures, these derivative products that were on a regulated, well-known exchange where you could speculate on the price of Bitcoin. You do futures for weeklies, monthlies, perpetuals. I don't know if they do perpetuals, but anyways, they offered a new way of speculating on the price of Bitcoin without having spot Bitcoin. These were cash settled futures. And so what essentially that means is that these markets are not suspect of the same type of manipulation. Anybody interacting with Chicago Mercantile Exchange has to be a broker, like a TD Ameritrade or Fidelity, and it's not just random people signing up on Coinbases or Binance's and moving their order books. And that stuff is what the US government doesn't really like, because they don't really have any jurisdiction. They can't go in and see what's happening on a ground level on these exchanges. There's no law that enables them to do that. And so he mentioned that these ETFs were kind of close to USO, and he's basically saying that, I suspect that if there isn't already today, that there will be a USO for Bitcoin. And USO is essentially an oil futures fund where you can speculate on the price of a barrel of oil. It was an ETF that went crazy when oil hit negative, but it's also a way for people to kind of get exposure to the price of oil through an ETF done by futures. So as soon as he mentioned these comments, there were two ETFs filed. There was the ProShares BTC ETF and the Invesco ETF. So ProShares and Invesco ETFs. And essentially their ETFs are based off of the Chicago Mercantile Exchange's price for Bitcoin and Bitcoin futures. So their ETF is not based off of a Coinbase or a GBTC or anything like that. All of the other proposals that you see for Bitcoin ETFs right now are kind of based off of another type of instrument. They're based off of GBTC or Coinbase's price, or a mix of Coinbase and Gemini and Kraken and all these things. And the SEC has said, look, we're not really there yet. I don't know what the requirements are going to be yet, but we're just not there. We're not going to approve these things. You can submit your applications, but we'll just delay looking at them and then eventually reject them. But again, he's saying, look, we can probably consider some of this around ETF filings if they look a little bit closer to USO, which they do. So the key thing to look out for here is that both of these ETFs were filed August 5th. And essentially how ETFs work is that they get filed to the SEC, their prospectus of what they're going to be doing and how they're going to track and what fee they're going to take. These things get filed with the SEC, and then within a few days, those things move on to get approved or pushed to the next approval date. And essentially the way that the SEC works is that they have these 45-day slots of approval. And if they know of their decision within 45 days, they approve it. If they don't, but they're not ready to reject it, they push it to the next deadline, which is 90 days from the date of application. And then same thing, if they don't know what they're doing, they push it to 180 days and then 240. So the days to really look out for, because these are the days that line up with the deadlines for the ETF approval, are September 19th, 2021, that's this year, that's in 45 days, is a potential date that a Bitcoin futures ETF could get approved. What is the likelihood? I think pretty low. I would say if they approve it within 45 days, that would be very, very fast for them to do so. The other days are November 3rd, 2021. So September 19th, November 3rd, that's the 90-day deadline. That can potentially be one. If it's going to be approved this year, it has to be on November 3rd. And then the other deadlines, they're hard deadlines. So they actually have to get a response of either accepted or rejected by these days. February 1st, it's a soft deadline. So if there isn't an acceptance or rejection, they have to give a very concrete reason for why they're still talking about it. It can't just be we're just delaying it to look at it further. It has to be some type of feedback that they're giving to the Invesco or the ProShares filers so that they can move forward to getting this thing approved. So if it's not February 1st, the next date is April 2nd. And then by that date, it's a hard yes or no. So you got September 19th this year and November 3rd, and then next year, February 1st and April 2nd. If we are going to get a Bitcoin ETF, in my opinion, looking from what the chairman of the SEC has said and where the SEC stands, it is going to be a Bitcoin futures-based ETF. And so that will still have really positive implications on the price of Bitcoin. People will be buying spot Bitcoin in anticipation of this. They will be buying, BTC futures in anticipation of this. The holding requirement will not be the same though. So institutions and this ETF in particular will not have to go out on the market and just buy a ton of Bitcoin. They'll be able to just buy the futures, or they'll be able to track the price of the derivative as well. So that's it. We're going to get our Bitcoin ETF sooner or later. I don't know if it's going to be this year, but I would say probably going to be next year. Another thing to look at, and I don't have the particular article, is that a lot of companies are coming out now, like MicroStrategy, that have a bunch of Bitcoin in their treasury. I imagine eventually we're going to get a Bitcoin Treasury ETF. So all these companies like MicroStrategy, Square, Tesla, companies that hold Bitcoin will kind of become their own ETF, and that'll be kind of balanced based on how much Bitcoin they have. We might get a miner ETF as well, like a Riot and a Mara and a BTBT ETF as well. But yeah. A lot of interesting things happening in the world of crypto. If you're in the US, get out there and do your part. Link in the description or just look it up. And that's the show for this week. So yeah, I'll dive into the live chat now, see if you guys have any questions. The tax bill would have to go back to the House, which is going on a break. It will be back working in September. There is time before the bill gets passed. I was thinking that too, because the bill is, it's not set to just get passed right now, but the amendment itself is going into the next draft, and I think the amendments are up for a vote tomorrow. So if the amendments get passed, they're in the bill in September, and basically what that's going to mean is like most people are not going to be a yes or a no vote based on this tiny amendment. Whatever the amendment is, people have already made up their minds as to like where they're going to vote on this bill for the most part. It's a very small part, so it is really important that people go out and they make their calls today to their senator and make sure that this amendment, the Warner and Portman one, is not included, and the Wyden, Toomey, and Loomis one. I don't know how I remember all these names. They sound like cartoon characters sometimes, but those amendments will they're voted on tomorrow, so the fight will go on, and we'll see what happens from there. All right, gang, how's everyone doing today? Quiet chat. Are we still liking doing this on Fridays? Like, I can do it earlier in the week. I find a lot of cool stories end up coming in like Thursday or Friday during the day, and a lot of the show will be more focused towards that. Like today it was all about the cryptocurrency legislation, but all these stories came in like at the Wednesday. I was thinking of possibly doing them on like a Saturday, Sunday, or like a Monday pre-game thing, but you guys can let me know. But yeah, we'll call it a day for this stream. Thank you guys so much for watching. Again, if you want to stay in touch, you have any other stories you want me to cover, you can share in the Discord down below. And once again, appreciate you guys watching. We'll have a more regular video out soon. But it's so awesome to do the show every week with you. I get to learn about the news a bunch, and hopefully you guys do as well. So yeah, take care, and I'll see you next week. Have a great weekend.